Hello, and welcome back to the channel. I'm Algabot, and today we're exploring an expert advisor for MetaTrader 5 called Return Skewness Rotation. This is a statistically driven strategy that studies the shape of recent returns rather than price alone. Over the next few minutes, you'll learn the idea behind it, how it reads directional pressure using skewness, how it decides when to enter long or short, and how it manages exits with an average true range stop and target. Everything here is educational information only. So let's dig into how this approach thinks about the market. So what exactly does this expert advisor do? Return skewness rotation is built on a first principles idea from statistics. When we look at a stream of recent price returns, we can describe that distribution with several moments. The first moment is the mean, or drift. The second is variance, which is how spread out the moves are. The third moment is skewness, which measures asymmetry, whether the distribution leans to the upside or the downside. The core hypothesis of this strategy is that directional pressure often appears in that third moment before it becomes visible as a trend in the average. The intuition is this. Near a genuine shift, one side of the market quietly absorbs a cluster of small opposing moves, which forms the body of the return distribution and then releases in occasional larger moves, which form the tail. The sign of the skew reveals that latent pressure well before it turns into obvious momentum. Because raw skewness values differ from symbol to symbol and across time frames, the strategy doesn't use a fixed level. Instead, it standardizes the current skew reading against its own recent history, producing a z-score it calls SkewZ. This keeps the signal in regime relative units, so the same settings can adapt across different instruments and market conditions. This expert advisor can be applied to any symbol and time frame in MetaTrader 5, from major currency pairs to metals or indices, because the math adapts to whatever it is measuring. It uses no traditional indicators, no moving averages, and no oscillator library. Skewness is computed directly from log returns, and the average true range used for risk is calculated manually from true range. In terms of who it suits, this is really aimed at the analytically curious trader, someone who enjoys understanding market structure through a statistical lens and wants to study how asymmetry in returns behaves. As always, this is educational information, not a recommendation, and trading always involves the risk of loss. Let's walk through the mechanics step by step, exactly as the code does it. The expert advisor acts once per completed bar. On each new bar, it takes the bar that just closed and updates a rolling series of log returns, which is simply the natural logarithm of each close divided by the previous close. Once it has collected enough returns to fill the skew window, which defaults to 30 bars, it computes the population skewness of that window. Skewness here is the third central moment divided by the standard deviation cubed. A positive value means the recent returns lean upward, and a negative value means they lean downward. Each bar produces one skewness reading, and these readings are stored in their own history. The normalization window, defaulting to 50 readings, defines how far back the strategy looks to judge what is normal. It takes the mean and standard deviation of those recent skew values, then standardizes the latest reading into a z-score called SkewZ. In plain terms, SkewZ answers the question, how unusual is today's asymmetry compared to its own recent behavior? Now for the entries. The strategy holds only one position at a time per magic number, and it enters only when flat. When SkewZ rises to or above the entry threshold, which defaults to 1, the upward asymmetry is considered to have rotated in, and the expert advisor signals along. When SkewZ falls to or below the negative of that threshold, downward asymmetry has rotated in, and it signals a short. Exits work in two independent ways. The first is a dynamic exit. If the strategy is long and SkewZ rotates back below 0, the asymmetry has neutralized, and the position is closed. If it is short and SkewZ rotates back above 0, the same thing happens. The second layer is a protective stop and a target based on the average true range. On a long, the stop is placed below entry at a multiple of ATR, 2 times by default, and the target above entry at a larger multiple, 3 times by default. On a short, these are mirrored. That gives a reward to risk shape of 3 to 2 on the ATR distances. The average true range itself is computed manually as a simple average of true range over the chosen period, keeping the behavior transparent and independent of any indicator library. Every one of these numbers is an adjustable input, so the behavior can be studied and tuned. Let's look at the actual MetaQuotes language code that runs inside the Expert Advisor. At the top, you can see the input parameters. SkewWindow, defaulting to 30, sets how many log returns go into each skewness estimate. Norm window, defaulting to 50, is the window used to standardize that skew. EntryZ, defaulting to 1, is the entry threshold expressed in regime relative units. ATR period, AtrSlMult, and AtrTpMult control the average true range calculation and the stop and target distances, defaulting to 14, 2, and 3. Lots sets the order volume. Just above the signal blocks, the code takes the latest skew reading and converts it into SkewZ by subtracting the mean and dividing by the standard deviation of recent readings. That single number drives everything. Now look at the buy block. The condition reads, if SkewZ is greater than or equal to EntryZ. When that is true, the code reads the current ask price, sets the stop loss at the ask minus AtrSlMult times ATR, sets the take profit at the ask plus AtrTpMult times ATR, and calls trade.buy with the lot size and those levels. The sell block mirrors it exactly. If SkewZ is less than or equal to negative EntryZ, the code reads the current bid, places the stop loss above the bid at AtrSlMult times ATR, places the take profit below the bid at AtrTpMult times ATR, and calls trade.sell. Notice that the stop is a smaller ATR multiple than the target, giving that 3-to-2 shape on both sides. Because both are measured in ATR units, they widen when the market is volatile and tighten when it is calm. Now let's bring it all together on a chart. On top you can see the price candles, and in the panel below is the strategy's own indicator, the SkewZ score, which we've been calling SkewZ. It oscillates around a central zero line, with a dashed line at +1 marking the long entry level and a dashed line at -1 marking the short entry level. Watch how the panel tends to lead the price. Look at the opening candles on the left. Price is drifting lower, a few small red candles pulling down toward a fresh low. On the surface, this looks weak. But watch the panel underneath. While price is grinding down, the SkewZ score is actually climbing. That is the whole idea. Underneath those small down candles, the market is quietly absorbing selling, and the occasional larger up moves are pulling the asymmetry positive. By the third candle, the SkewZ score pushes up through the +1 line. That is the condition the code checks, SkewZ greater than or equal to EntryZ. The Expert Advisor signals along, and you can see the buy entry marker appear right near that low, even though price hasn't turned up yet. The stop loss is placed below at 2 times the average true range, and the take profit sits above at 3 times ATR, that 3-to-2 reward to risk shape we discussed. Now watch what happens. Over the next several candles, the latent pressure the skew detected becomes visible momentum. Price rotates up off the low, printing a series of green candles that climb steadily. The SkewZ score stays elevated in positive territory, confirming the upward asymmetry is intact. Price keeps rising until it reaches the take profit target, where the position closes for a gain in this illustration. Notice that the entry happened before the trend was obvious. That is the behavior the strategy is trying to study. As price peaks, the character of the distribution changes. Watch the panel again. Right as price stalls near its high, the SkewZ score rolls over hard and drops down through the -1 line. Underneath that toppy price action, the market is now absorbing buying and releasing in larger down moves, so the asymmetry has flipped negative. That crossing below -1 is exactly the short condition, SkewZ less than or equal to negative EntryZ. The Expert Advisor signals a short, and the sell entry marker appears near the high. This time the stop loss is placed above the entry at 2 times ATR and the take profit below at 3 times ATR. Then the move plays out. Price rotates down from the high, printing red candles that step lower, one after another. The SkewZ score stays in negative territory, confirming the downward asymmetry is still in control. Price continues falling until it reaches the lower take profit target, closing the short for a gain in this example. And of course, the strategy has a second way out that isn't shown activating here. If the SkewZ score had rotated back through the zero line before the target was reached, turning negative while long or positive while short, the Expert Advisor would have closed the position early, because the asymmetry that justified the trade would have neutralized. In this illustration, the average true range target was reached first, so that dynamic exit simply stood by. So the pattern to take away is this. The SkewZ score is a leading read on directional pressure. It tends to move before price does, crossing its entry levels while the candles still look ambiguous. The strategy enters in the direction of that asymmetry, protects the position with an ATR-based stop, aims for a larger ATR-based target, and steps aside if the asymmetry fades. Remember, this is a clean illustration for learning. Real markets are noisier, signals can be false, and losses do happen. So that is return skewness rotation, a MetaTrader 5 expert advisor that reads directional pressure from the third moment of the return distribution, standardizes it into a regime relative Z-score, and rotates between long and short as that asymmetry shifts. We covered the core idea, the exact entry and exit logic, the metaquotes code behind both signals, and a candle-by-candle illustration of a long and a short. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you would like me to explore next. You can find more educational content over at www.algobot.live. And a final reminder, this video is educational information only and not financial advice. Past performance does not guarantee future results. Trade responsibly.